What's up, guys? Welcome back. Forgot to turn off the music. What's up, guys? Welcome back to another episode of 0x, another live stream of 0xResearch. I don't typically host these, so I am always a little bit behind, as with my reactions to the market as well. How is everybody doing today? Guys, the music's gone. Very good. Thank you, Carlos. I appreciate it.
Oh, we're live.
We're live.
Oh, wow.
You can
Okay.
speak.
Good morning, everyone.
Good morning. We were just talking about the hate you've been getting, Ryan. Do you wanna share it with the
Not
live stream?
really. I mean, just I feel like people are losing money, people are lashing out. And it's okay. It's, it's just the internet. It's just investing. Not everything is a moral crusade, and
See, this is very different.
there's a person behind that Twitter account.
You know who was getting a lot of this hate? Dan Smith. When we first started posting about REV and whatnot, Dan Smith, I remember he had to change his bio from whatever it was to something like, please like kind reminder that this is only like Twitter. And I mean, I imagine he had a lot of people come up to him, and because basically like all he did was post stats, but you know how Dan does it, he's a little snarky, like if somebody comes up
snarky?
Yeah, he's a little like, he's just like, the thing is that if you don't know what the stat is, or like if you fundamentally disagree with facts, then like anything somebody responds to you, you're gonna take it as snarky. Like I'll tell Dan like, hey man, like I think whatever hyper EVM is doing really well, and he'll be like, actually it's not, like you can see the REV over here. And to me that's snarky, because it's in my interest that the hyper EVM does well, right? It's not actually snarky, but he's just giving me the fact. But yeah, it's tough. I mean, I don't know how much we can get into this without sounding narcissistic.
Life's hard if facts upset you. It's gonna be real tough.
Very good. Jakob, you're quiet. Are you also doing good?
Yeah, doing okay. Not the best day ever. I was just gonna say, I understand why people like sometimes cope and rage on Twitter. I feel like a lot of people who are trading, their trading is so not correlated with their real life, right? They have like a real job, they have real friends, and then they're just coming home and like losing 100K or like missing generational wealth after generational wealth. And I mean, in that case, like, how do you cope other than just sending someone on Twitter an angry message in an anonymous account, right? I mean, it kind of makes sense. And I almost did that today. I almost crashed out on Boccaccio because he took my plasma allocation. I didn't click fast enough. But like, all you can do at the end of the day, take it, add it to the whiteboard you've written down of times you missed generational wealth, and hope that you hit it once.
See, the thing here is that the younger generation, you don't know how to use the EVM that well, versus like I remember people weren't upping gas fees because they're used to Solana where you just spam it as much as you can and there's like free settings. But it's okay. It's only like a 300% thing for depositors. It'll be fine. There's another trade on the horizon always. No need to be too upset.
I mean, yeah, the thing is, it's pretty easy to rationalize like missing out, right? When there are 100 trades, but it just hits different when you like already made up that you're gonna make the trade. You had the money ready, but you just too slow to click, right? That's a pretty stupid reason to miss generational wealth.
Yeah. Another thing here is that I wrote about this on a newsletter, one of my which we publish every day. So you guys should check it out. But I wrote about this, and it's like there's always 4 to 5 trades per year, right? That are like really good. I mean, this isn't something that I come up with, and the 4 to 5 number is very arbitrary, obviously. But you don't have to be too upset. There'll be something else next month. I mean, I'm sure there will be more stuff next month. Like there's a bunch of chains launching. I mean, if you think 10% of them will do well with a token, it'll do okay. We have a special guest. But before we do that, I want to give a shout out, and then I'm gonna have Colin from MetaDAO on. But before that, just want to give a shout out to our sponsors, Aptos and EigenCloud. Aptos, Bitcoin DeFi is heating up on Aptos with nearly 400 million BTC assets on chain. Aptos users can now earn yield on their Bitcoin via Echo ABTC and OKX XBTC without the typical bridge risks and high fees. Thanks again to Aptos for sponsoring today's stream. And for EigenCloud, is your treasury losing value to inflation? Learn how to make digital assets like ETH and SOL productive with uncorrelated protocol-driven staking rewards. Read the Productive Treasury Report today by following the link in today's show notes. With that, just put myself, there we go. Hi, Colin. Give me
Colin.
Very good. How you doing?
I'm doing well. How are you guys?
Good.
Outside of crashing out from missing generational wealth.
Everyone's okay. Jakob will have to cope for a week or so, but I'm sure he'll forget about it in a week.
Yeah, I've been in crypto for 11 years now professionally. So there's been plenty of those moments in my life. I just don't look backwards.
I can imagine. Carlos, I want to let you lead some of your questions with Colin, but before that, Colin, do you want to give a rundown of what you guys have like recently launched? Because for context, I followed MetaDAO with Futarchy. I thought Futarchy was very interesting, but then you guys decided to launch a launchpad as well, and it's like distinct to the way that other launchpads work on Solana. Primarily, I think it's distinct to Believe and Pump Fun. Do you want to kind of run over that a bit?
Yeah, to spread the good word of Futarchy, where's the best place to get people to adopt it, and that's at the initial capital formation period. We had experiments with existing DAOs and organizations to run Futarchy, but it wasn't teeth. Like this wasn't binding. This wasn't something that like proved that Futarchy could work. So yeah, it came down to, hey, we think that we've got something here with being able to do, I call it a fundraising platform, not a launch pad, just to be distinct, but that's just some verbiage. Like we could have these funds that are governed under Futarchy, and what does that mean? It means that people can't run away with the money like you could with any existing ICO infrastructure, or any trading fees that go back to you, or any initial capital allocation or liquidity token allocation, that kind of stuff. And the mechanism designed for the launchpad is important, and we can go into more details around that. But like, it's a key differentiator that you can't run away with the money, and that attracts founders, people that want to build. And I think that that's something that's pretty cool about what we're working on.
Who are the typical founders that you guys are going for? Because I imagine it's like pre-seed, or at least like.
Yeah, I think you got to prove it out. This is frictionful for founders, and I completely understand and sympathize with that. We ourselves have run Few Turkey. We didn't have any token allocation. We didn't do fundraising traditional ways. We had to go to the markets to create these proposals to get allocation, to get capital allocated to us, issue tokens, etc. So yeah, like I think it's what I've seen right now is early stage founders that don't have traditional access to venture capital dollars, or maybe are in the competitive landscape that, you know, maybe you have one or two existing protocols or projects. But I mean, we have found some venture backable founders and worked with them. We went outbound to find these people. We thought maybe our total addressable market was one person out there that could raise VC dollars that would use this protocol because there is high alignment. But right now I'm seeing people come in maybe that need to raise anywhere from 100,000 to $1 million. And I haven't had anybody that's come in much bigger than that, at least right now. And I think that there's a funny reasoning for that, but you know, I'm happy to talk about that too later.
Can you talk us about like the evolution of MetaDAO, like from a fringe Few Turkey just governance platform to how did you guys land on, hey, we want to do this ICO thing? Like, why did you embed Few Turkey like from the earliest stage of like capital formation?
Yeah, kicked it off where we were the single tenant of the protocol itself, right? Like METADAO was Few Turkey, would be using it to make decisions. And after maybe 2 or 3 months, then it was like, oh, other organizations that are on Solana want to use this if we could make it multi-tenancy. And so we spent the next 3 months, April through June, building out a multi-tenancy protocol and a lot of the key features that you see today, as far as like the trading and the platform. And that was good. Solana doesn't have a lot of DAOs, unlike Ethereum. It has good ones, right? Like Jito, there's Jupiter, etc. But you know, like your addressable market there, and then getting those people that are pretty effective in decision making already to replace decision making just may not make sense. I mean, and we're not like governance maxis here. If everything is working well, then you don't really have to throw a wrench in it just for system's sake. So yeah, like the adoption was slow, and then you can't, if you don't iterate quickly, how do you prove efficacy of Few Turkey? How do you prove that it makes better decisions? There's some Ethereum competitors at this point, Butter.markets, obviously. They're taking a different approach on like metric-based, KPI-based. We went down that rabbit hole with some of our experimentation just to see like what could we do with it all. And then I think February of this year, it was, hey, you know, we use this to raise money, right? Like Thea has raised proposals to us to, you know, allocate capital for a token OTC deal. We raised a proposal to go raise from Paradigm, ultimately raised from Paradigm. Pantera raised a proposal, got rejected. So like this could work, right? Like the reason that people are putting money in, maybe there's some thesis there. So we circled back around and said, well, if funds are governed under Few Turkey, the cool thing is we can't just run away with it, right? Like the protocol exists there as a protective mechanism. And, you know, Prophet was like, I really want like you to be on board with this, but like I think that we have an opportunity here to like start a ton of Few Turkeys where people actually need to use this to get anything done. And I think that was like the evolution process for where we are, that like accelerate Few Turkey, accelerate the capital formation, get accountability back into crypto.
Yeah, I had a hard time, to be honest, like understanding Few Turkey at first. And I think like this is one of the reasons like MetaDAO is not super big today. Like I think people hear Few Turkey and they're like, what's like this nerdy thing? Whereas I think if you place more focus on the token holder rights thing, then it clicks with people, or at least it did for me. Like when I understood like it enforces token holder rights, that's when like it kind of made sense to me. But when it was just about like this future key thing, it sounded like too academic almost. Whereas if you like embed it like from the earliest stage of capital formation and you have a way to enforce those decisions, then you can actually protect token holder rights. I think it would be cool like to tell the story of Mountain Capital and how that worked out for token holders, because it really showcases like the power of MetaDAO.
Yeah. Yeah, like I mean, I think like the cool thing is you don't have to understand futarchy to be protected by it. You know, like we're in this like, which is weird for crypto, and you know, like I own stocks. You guys probably own stocks. How much do you guys participate in shareholder votes and shareholder meetings of like regular companies? And it's like in crypto, these people want to participate, which is cool. But then we run into like the same problems that we have with any of this stuff, that like the uninformed user doesn't really have anything to add. And it's maybe more like noisy in crypto for a lot of this stuff, because we debate whether $12,000 a month salary is like too generous, which is fair, right? But like with futarchy, you don't have to, you can own the token, you don't have to show up. And I think that that's like important. You still have like these minority shareholder protections or token holder protections that are baked into the system just by holding the token. Yeah, and like Mountain Capital is one of those things that you did not have to show up to like vote on anything. If you just bought the ICO and then actively like participate in the redemption right now, you had 57 cents a token, and then now you have 60 cents a token that was returned to you. But yeah, so Mountain Capital, for everybody background, was a liquid fund built on the thesis of Mountain DAO, which is a biannual or twice a year event that's held in Salt Lake City, Utah, that gets Solana developers together. And a lot of cool teams come through. And the thesis there was we have preferential deal flow. We could start to cut like seed checks or angel checks, early stage checks, and get preferential access here, which like would work for futarchy in my mind, compared to like forecasting, hey, we want to do a like market buy where you could be front run for that stuff. Yeah, so then it garnered a lot of interest and had 5.7 million raised. Unfortunately, was not able to get any capital allocated into its like thesis. The only proposals that were successful was buying back the token up to its net asset value per token. So the token traded below the dollar value that was in the treasury. And at a certain point, it continued to trade below that, which creates a incentive mechanism for anybody that has bought the token below that to only want to unwind, right? Only wants to realize the value in the treasury. The attempt to buy back up to NAV yielded some profit in there. And obviously the trading fees were accrued to the LP. So that's what ended up, you made some money if you just held the Mountain token. But being unable to get capital deployed at some point, then now everybody has the incentive to unwind it. And this was the like fundamental question on when we talk about unruggable ICOs, what do we mean? And so in this case, proposal was raised, said, hey, let's redeem the treasury. And in that case, it was permissionlessly executed. It unwound the LP. It took a swap program, and it deposited US dollars or USDC, and then accepts Mountain token, and then you get a redemption for that. So that's how like that whole process to unwind a futarchy would work.
Awesome. I don't know if you guys want to chime in, feel free, but like another thing I wanted to discuss is just like this futarchy AMM that you're going to release like soonish. What does it mean like for the monetization of the protocol, and like what are your like projections in terms of how much it could generate for MetaDAO?
Yeah, I always say it's hard with the sample size of one to do any kind of projection with a lot of this stuff, but yeah, like we fought for or we've fought with the idea for revenue for a while at METADAO. Obviously, there's a lot of different things you could do. You could charge for setting up a organization. You could charge per proposal. You could charge on conditional markets. So we had a lot of like back and forth on where the best alignment was with a lot of this stuff, and ultimately came down to two options. One is with the fundraising platform, obviously taking a carry or a cut of the total funds raised. We just thought that that was misaligned because you would be encouraged to only get people that are going to raise a lot more money, or you want to churn through them a lot. And I don't necessarily want to be a treasury company because like, I don't want to like hold tokens and have people that hold high opinions about these tokens and what you should do with them. But then like in protocol, where could we charge fees? And the, you know, like the swap on top of the AMM, we would have to do something with Radium or with Jupiter, with Meteora to do anything with that. And we have a unique problem that like we need liquidity for these proposals to be traded. And the deeper liquidity, the better we feel about how like proposals can be traded, because, you know, if you put $2,000 into a proposal, you can swing that dollar value a lot for people, and people can't trade with size on opinion. And so, yeah, so we built an AMM that lets you put the conditional markets and tradings for proposals and the spot liquidity, and it borrows from the spot liquidity anytime a proposal is created, and self arbitrages. So for those that aren't familiar, you have a pass and fail market. Those pass and fail markets ultimately resolve back down to the original assets once a proposal is over, whichever one succeeds. And so there's an arbitrage based on the likelihood of how much, like how likely pass is to succeed, for example. So if pass is trading above spot, then you can buy spot and you can sell into pass and you can make some money, which is cool, but you know, it's not great for a trader. It's not great with AMMs. So this self arbitrages, it keeps the spot in line with the conditional markets. But importantly, it gives us a path towards revenue, because now there's a reason to have this. There's a reason. It's not just a uni V1 mechanism, you know, like there's some science and understanding behind it. So yeah, like we put in at current 25 basis points fee paid to METADAO, and then a 25 basis points fee that's paid to the LP, which are all things that can be changed later. And if you look at the total liquidity, the total trade volume of Mountain Capital and OmniPair in the past, I mean, since April is when I look back, I think we're sitting at over 60 million in total trade volume. So you can back that out. I think it's like 150,000 in revenue that would have been accrued to METADAO. And that's just me looking at like Bird Eye's API. So I don't have a great thing. So yeah, like it'll be interesting to see. Obviously, proposal volume gets calculated into that as well. And we haven't had any proposals for OmniPair at this point. So it'll be interesting. I'm like curious to see how many we can get out there, and then like how many decisions actually need to be made for a lot of these companies. Because it could be that like you just need to raise money and you need to be accountable for those funds, and you may not need to make a decision except for once a year.
Yeah, I was hanging out in the OmniPair Discord, and like they were like Raka was telling like in the chat that the current monthly spend rate is like 10K per month. I think there's a possibility that the first proposal is just to raise that to a higher figure because they're a team of 4. So if you have like 10K, like it's kind of hard to like pay everyone. But yeah, one of the interesting things I found about like ICOs on METADAO is that it actually gives you venture style return possibilities. And what I mean by that is like, if you look at other platforms, I love to get everyone's takes, is that like usually when ICOs take place, it's already at 6-figure valuations. Like look at Plasma, like it gave you like a really good return, but it's like it was already at like I think 500 mil fully diluted valuation. You can have like other examples, Athena 300 million, like Mega ETH six figures. 0xResearch, I think it was like 750 million. Whereas with MetaDAO, you kind of have this really good opportunity to actually have like a venture style return, because it's like $1 million like fully diluted valuation out of the gate. But the problem with that is also that like a lot of retail founders or retail investors, sorry, are putting money into these things, and like venture capital is really hard, right? So like if you just put like into one, like there's a real chance that you're not like going to make that return. Like from my understanding, like the optimal VC strategy is to just do a bunch of these, and then one of them like 100x's or whatnot.
I don't know if Colin can speak on the optimal VC strategy out of. Colin, can you speak on it because of your position, or?
Yeah, I mean, like I can, like the thing that we were optimizing for was founders first, because you need to get somebody to launch on this, and then like it appears that the investor appetite is there, right? Like OmniPair raised 3.3 times the amount that he wanted to raise. We will see with these other ones. Like we have obviously more attention turned to us at this point, but we also have more coming out. So will people be reserved because they like another one or they have some expertise in that? But I don't disagree with that. I think that the approach is early stage. You're probably looking at like founders, and you're probably hyper focused on your specific vertical, right? Like if DeFi or DePen, you're looking for these people, and maybe you're pushing these people to the platform to raise. Yeah, like I mean, I've seen it across the board with different ethos, values, different areas of interest, expertise. That's what's cool for me, is that like I'm not a venture VC investor. I'm not an early stage. I'm not an angel investor. And like why was I the one gating and making a call on any of these teams? I think the market should go out there. And I think a lot of founders, like with sharing the risk of this, like if you're a founder and you need to raise 100K to prove concept, and then you're going to go out and use it like we have to raise a seed round, like that could be very interesting, and you will get a lot of people that think they can support and like carry this company to that level. But like in discussing with people, I think it is kind of like, well, we may just invest in 100 of these things because one of them is going to hit. And I think the other very interesting thing is if they don't hit, you may be able to wind these down much faster than like playing it safe, like building into this, like, well, we need to go raise again and find out you can't raise again, right? Like somebody can bring up a proposal and say, listen, let's redeem the treasury. Like they are not competitive. They have been working for 3 months. Yes, they've spent a quarter of the total funds, but like we can actually return on our capital at this point and not have lost everything. And I think that will be interesting. And I think you will also have non-genuine founders that come out, try to raise from this, at most can spend 1/6 of their minimum target. But I think people will like target these organizations that trade below their net asset value, and they'll come and they'll liquidate. And so I think it'll be interesting. I think we will start to focus on, now that founders are coming in, now how do we attune investors, and like what are the platforms and features we got to build there. I've had I've had asks of like, can we get a data room set up? Can I get a Calendly set up so I can talk to these founders? So like people are doing their due diligence. It's just like this whole like system probably emerges around it, and then like maybe people do have these like inside groups, and like we're gonna get in on this ICO, and we're gonna make sure that we support this founder compared to this other one. So I think it's quite interesting.
What do you say to? I brought up this idea to founders, and the immediate pushback I get is complexity. Almost immediately in every case. Like, when you have these conversations, like what's your pushback to that?
Yeah, I think Futurgy is there for the worst case scenario, and there's incredible alignment with investors like that are supporting you, right? And I think that that's the core differentiator. I think people are using the frame of reference of like pump tokens or believe tokens, or like you have these just massive influx of people with opinions and expectations. And from here, I think that we will like cater to a specific investor and then cater to a specific founder. Yeah, like I agree with that. I agree. If you can go raise North American venture capital dollars, it's probably easier for you to just go do that. I will say that I think that any token that is built out after that is going to be cupped because you have like low float, high FDV. And I've talked to founders about this, which is like really interesting because it's like, hey, we had a round. We need $125 million valuation. And you go, okay, let's launch a token like that, right? Where your token supply is your FDV and the marginal buyer doesn't exist, right? Like there isn't $125 million demand of your token to be satiated. So that's why you have to go out and sell 2%. And so like, there's a reason why this stuff exists the way that it is. But like, I think that is like, not great. like you will deal with that token overhang, and hopefully we have better examples moving forward. But yeah, like you will either have friction now or you will have it later. It just depends on like what you need to do and when. I think you get a lot of cool support from Futurgy where you can design tokenomics and you can have them broadly rejected. Rather than like, hey, this is, like we've spent time on all of this and we're going to do it. And then like your token price still goes down, right? Like no matter how clever or creative you wanted to be with it. So, yeah, I don't think that you ever lose complexity. It's just conservation and where it's offloaded ultimately for that.
Yeah, it seems like when I think of like a team that would really benefit, like that obviously very much benefits from participating in this, it's anonymous, globally distributed teams, right? Like you add like a lot of people, like crypto's different. People want to stay anonymous. There have been successful anonymous teams, but an investor, if they're doing their job, they have to apply a higher discount rate to that, and in their LP documents, they might not even be allowed to invest in anonymous teams, or it might be just like a policy they don't do it. So as like an insurance policy, or to like minimize that risk of being rugged, frankly, it seems like a great place for anonymous teams to talk to the market and raise capital.
Yeah, and I think like incumbent, like or one teams where an incumbent exists within the ecosystem that has like a poor token design or a token that like is distressed, you could probably come in and be like, this is just a better token and a better design and a better way to participate and a better way for you to like have access to all the things that you want. And then higher risk ideas as well, right? Like, so stuff that maybe traditional VC wouldn't touch. So it's not just anonymous founders. It could be like why, like far left ideas on this stuff, on like how to get it out there. And then like, maybe it's the ethos of crypto that these people will come and you will find 100 people with $10,000 to raise and you have $1 million to go build out that vision.
I think like funds too. I think funds could be interesting where it's like, they have a yield mandate, and, I think often capital allocation decisions, like I think some funds, when they, perhaps stop generating alpha, they keep going. They might even gate investor capital, but this is like the investors can decide, when to shut down the fund or whatever, or return capital to investors.
Yeah, I think it creates cool coordination solutions, and with the legal structure behind it too, which is just something that people haven't touched for a variety of reasons, but it's important. And yeah, like I think you get a lot of, now we still have to prove this all out, right? Like this still has to be like have a chance in hell to be like validated, which is fine. I think that I'm willing to do that. I'm willing to take that to court and figure this stuff out. But yeah, like it presents some very unique scenarios, solves from some very unique things that are like crypto centric, that you want in the time that you like want them and need them. And one of my favorite examples is Mango. When that stuff started to go down and unwind, once you had 51%, like they had an agreement in place with the SEC, and then they just go and, the other half violates that agreement. And then like everybody's contacted, how quickly can we get this into a futarchy because they have to buy everybody else out. And you're like, you can't do that like at that stage. You have to have done it at the very beginning. And I think that that's pretty cool.
Yeah, speaking of Cope earlier, have a lot by missing the recent move in MetaDAO. A ton.
I think this is the one he can't speak on. I'm not sure. There's one of them that he's not going to be able to speak on, but we'll keep taking on the risks.
Oh, I have actually one more question. This is like I think MetaDAO is like very crypto native and crypto aligned. What do you think about this seems like obviously like cypherpunk people should be singing the praises of MetaDAO. Like I'm surprised that like Vitalik hasn't praised the project. It's ambitious and it's like to the ethos. I mean, what do you think about not everyone that you would assume that's paying attention is paying attention. I don't know if you have any comments about that.
Yeah, I mean, I think like crypto is very interesting in that you have these low-level protocols, operation codes, and like you have gotten marketers around it, and then everybody champions a protocol, and it's kind of like it's one of those big like confounding and confusing things for me, because could you imagine like if we had HTTP3 and RPC like V3, and you're like what are we cheering about? Like who actually uses this stuff? But I think there's a lot of tribal mentality there. Like people want to keep stuff in the same vertical, because if they don't, then it starts to like mess with thesis or understanding of or canonicalization of stuff. I think that that's like certainly challenging. And then like exposure, right? Like, I mean, people have brought in the past like few days have brought me 10 things that I didn't even know existed in crypto. Or I remember the post from Zach XBT about paid KOLs, and I was like, I've never seen one person on this list. So like I think there's just so much that can be done, and then on the fringes and a lot of stuff we're making noise, right? Like we're talking with Robin Hanson, we've got him as an advisor, but like these are also small circles in that. And so I think penetration into the wider like mind share of crypto and like the ethos of crypto, that stuff has been like a moving goalpost in the past like few years as well. So like I don't know how you really shift into that like narrative, except to be supported by your tribe that is going to go to bat for you to like make sure that it's known that like this is where you are and this is the stuff that yeah, I mean that's probably my thesis on it.
I mean, one really cool thing, sorry, Bob, go ahead.
No, go.
No, I was going to mention like Colosseum is an investor in Meta. I think they engaged like in an OTC transaction a while back. One really cool thing would be like, because they host these large hackathons, right? Like they should encourage, in my opinion, like the winners of certain tracks, like just to go raise the ICO and MetaDAO instead of like giving them money like in a traditional venture style fashion. I don't know, like, is that something like you would explore? Like that would be really cool, like to benefit from that deal flow from hackathons.
I mean, yeah, obviously. I mean, like that's why we took a first stab at this like pre-mine or initial team allocation, is because we, if you have raised money before, you cannot use our platform ultimately, right? Like you cannot guarantee the investors the tokens or the equity that you promised, because you now just transferred all your intellectual property to this Cayman's entity, et cetera, et cetera. So like we built that in. Now it's price-based, time-based, which means that the investors will have to adhere to that as well. So I'm not sure if like they would have the appetite for that, but we're definitely trying to get in that direction, where we like move towards that, where I'm, like I said, I'm not an accelerator. I'm not an early stage investor, but these guys are, and they seem to have like this flow. But yes, like we're in close communications with them to try to figure out how to make this work. We definitely hear the feedback from the founders there on like what we can do differently to make this stuff work for them. And like someday I see a path that this all will work, and maybe they will continue to support and push us in that direction. But like the other interesting things is some of these hackathon participants launch tokens during like the hackathon, right? So it's like, well, could you just do that here? You know, like if you're going to do that already, you know, like does that create that place? And then can Coliseum effectively come in and create a proposal to say we'd like to invest in you and OTC some of your tokens? So I mean, that stuff's really cool. Like, and you know, coming back to Ryan's comment on like founders, there's something really powerful of, you know, you don't come to me to talk to me on like what I would accept as a raise or at like a valuation, right? You have to go to the market for that. And if I was to reject you, like that looks bad on me as a founder. Like I'm confrontational for VCs or liquid funds. Whereas like if the market rejects you, you're like, well, you just didn't raise enough, you know, you weren't at a high enough premium for the market to accept it. So I think there's something cool about that the market makes sure you get a good deal, get a good deal on like your capital raises as well.
Colin, before we have a little ad break, and then another section, I wanted to ask because one not MetaDAO related question. You said you've been within crypto for 11 years now. A lot of cope. What would you say is the biggest cope that you've had?
Oh, like for me, you know, like I think I would have liked to push harder on like my Bitcoin investment in like 2014 when I started professionally. Like I went out to go raise a fund for people, and I got laughed out of like every accelerator I was in, every person I was talking to. Like I had strong conviction in it. Obviously, I like that was where I determined I wanted to push my professional career, but like people were talking about it like it was, but I think the thesis there was like the conversation was also, this is gonna be illegal tomorrow, right? Like this is gonna be illegal, this cannot be legal. So yeah, like I think that's my biggest cope. And I was young, so I ate my returns, right? So I had to pay rent, to pay for food. Like yeah, I could have really been well off for that. So I think that's probably like my biggest cope. But it's also like my badge of honor. Like I've been through every major hack, every major exploit, and you know, like have gone through it. So I know how I emotionally respond to that, and it's created like I know what it's like to be in crypto, and I think that there's something really cool about that. So
You said you started in 2014?
yeah.
Wow. Yeah, that's,
Yeah.
I mean, I can remember being in college at the time and hearing professors be like, oh, the government will just shut it down. And I feel like I heard that for like the 5 years for 5 years after that, or 7 years
Yeah.
after that, probably. That's like that's a thing that only recently stopped. The government will just shut it down. And to actually like to be like for me personally, to be younger and just to hear that over and over again and not like be an expert, like, oh yeah, the government will shut it down. That's what they usually do. Um,
Yeah. Yeah.
so
And
just to stick through that's wild.
people were like, should I buy Bitcoin now? I'm like, it's $330. It's the highest it's ever been. But you know, you had Tim Draper that just bid $999 per token, and everybody says he's insane. So you know, like, there should have been signs, but you know, if I was better capitalized at that point, I think I'd be living a different life right now. And I think that's a blessing and a curse, because it made me want to like. I got attracted for crypto for a certain ethos, and I stayed in it for a certain ethos, and I've ultimately ended up at MetaDAO for it. So
Yeah, I mean, you wouldn't, if you had Giga made it back then, you wouldn't have done MetaDAO, and people
We
would
wouldn't be hanging out right now. That's very sad.
Very good. Colin, thank you so much for coming on. This was really fun. Before we do the little ad break. Do you want to? I mean, everyone's quite familiar with METADAO, but do you want to shill anything and say, go check this site out, go check out our latest blog post, etc.?
Yeah, so like, follow the Twitter account, which is METADAO Project. That we'll have updates. Our next ICO is coming out very soon. We'll have a product update for that as well. So we're like listening to a lot of people. If you're a founder and you're interested in raising in crypto and you want to do like crypto native fundraising, come talk to me. If you're an investor and you're curious at all about this, I've sat down with everybody. I've run them through various different angles on how METADAO works. I will beat it into you until you understand it, and I will do as many meetings as possible to make that happen. But yeah, like if you think any of this stuff is cool, I'm available on Telegram at Colin_House and like on Twitter. So I'm happy to talk to everybody about this.
Perfect. Thank you so much. And we'll make sure to post all of those in the show notes, except for the Telegram, because I feel like it'll get botted. But everything else will make it. Again, Colin, thank you so much for coming on.
Appreciate you guys.
Cool project.
Yeah.
Cool project, cheap token. And they're like way too smart.
Yeah. Guys, I wasn't lying about the ad break. Before I reach out to Dan Smith again and remind him to come on the pod. Thank you, Mark. Just wanted to give a quick shout out to both our sponsors, Aptos and EigenCloud. With nearly $400 million in BTC assets on chain, supported by a secure, fast, and affordable MoveVM environment, Aptos has become the BTC-Fi growth chain. Aptos users can now earn yield on their Bitcoin via Echo's ABTC and OKX's XBTC without the typical bridge risks and high fees. With support from Echo, OKX, and Stacks SBTC, Aptos is the best place to go for best-in-class yield on Bitcoin. Appreciate the support. For EigenCloud, corporate and protocol treasuries face a major challenge today. Cash and traditional instruments are losing ground to inflation. A new industry report from Liquid Collective and EigenCloud lays out the next evolution of the digital asset treasury, moving beyond just passively holding Bitcoin to actively making digital assets like ETH and SOL productive through liquid staking and restaking. Read the Productive Treasury report today by following the link in today's show notes. And we are back. Guys, you can come back on. There we go. Ryan left. Ryan, come back. What were we chatting about? Cope. I'm going to kick this guy. He'll just join on when he's back. Now Carlos left. Jesus Christ. All right, Ryan, what are we munching on?
I had to get a quick bite.
Very good.
I haven't eaten enough today.
Yeah, cheap token. They have to do a split, right? It was like $862, and they have to split it at 1,000.
They already did it.
They had to do it, yeah.
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 Are you saying they already did it, Carlos?
Because they did it. They've already split the token.
It's been done.
It's been done. Very good. I feel like it's kind of difficult to transition away from interview mode to regular mode. Is this something you guys are also feeling, or you don't mind?
No, I don't mind. What's
I
on the
also
docket
don't
for
mind.
today?
Jakob, I was surprised that you didn't say a single word, but you managed to do it.
Yeah, to be honest, I haven't read the report yet. So from Carlos, I checked it out. It's like 7,000 plus words, right? So as weekend reading for me.
TLDR.
Yeah, TLDR
But it
is
is interesting. It's
self-enforced.
it's like, how do you generate more interest in something like a METADAO? I think you got to put perps on top of it eventually, right?
Dude, if Ryan could do it, he would put perps on everything. Just like make everything. How do you make? It's like, those guys who put the Subway Surfers videos for Ryan. That Subway Surfers is just gambling. If you can just put gambling on something, they'll be focused on it, and it's fair. But
It's our industry. I do think that there's like, I mean, the perps changes the risk reward profile, so then you get this interesting, like a bunch of retail folks really interested in the thing.
What do you guys think of the insider trading stuff with the DATS?
Inevitable. Everyone saw it on the tape, and you know, the SEC's much better at policing that than crypto things. I think a lot of people are going to learn that the hard way.
Yeah, I think in crypto over the past however many years, you kind of got used to, oh, if I just like do a little bit of insider trading, no one's gonna mind. I imagine it's more serious.
Oh, big time. I mean, yeah, jail time.
So you can't insider trade even a little bit?
And even a little bit. Not allowed.
Interesting.
The funny thing, like in regards to insider trading, for crypto, what I've heard someone say is that it doesn't exist. They said like cryptos are not securities; they're commodities. You can't insider trade like commodities. Like a farmer can't insider trade wheat or cocoa beans. I cannot confirm if that's true, but that's what I heard.
Yeah, I don't know if that'll hold up in court.
And they're just farmers in crypto too, right?
Yeah, it's like the meme, you go to the court and you're like, Your Honor, my client thought that this was legal. That's the defense.
Wait. But this is I guess you can't insider trade Bitcoin. That one is like a commodity. It's regulated by the CFTC, no? I have no understanding of regulation, so
Yeah, let's stay away from this one.
No?
You can insider trade and do market manipulation on commodities for sure.
Oh, Jakob is just wrong.
I mean, I'm not a lawyer, but I think you can. Yeah, there's certainly market manipulation in commodities that people get in trouble for.
Okay, let's move on because none of us are lawyers. Plasma. Anyone interested in that? Shall I pull up the chart?
It's a bit expensive, no? Wouldn't you say so, Paul?
Why is it expensive? Shut up! It's not expensive.
I mean, you nailed the call. You want to get your victory lap out of the way?
Yeah, obviously, I want to get my victory lap out of the way. I want to do hours of it. I mean, I didn't even do great. It was just, to me, it was obvious. I'm surprised that you guys weren't that interested in it. Well, I know why Ryan's not interested in it, because he doesn't like stablecoin chains. Carlos, you're not interested in it?
I mean, I think I think their go-to market is really interesting. Like this dual track that you mentioned yesterday, where they can have these payments as a loss leader and like kind of outcompete Tron with local partnerships and then just like build out the DeFi side. I think like, yeah, Aave stats that I shared yesterday are really interesting. Like Plasma is already like the top chain for Aave in terms of deposits and borrows outside of Ethereum mainnet. The big question for me is that really sustainable once the incentives end? But they can like kind of like vampire attack USDT sitting on Ethereum, I think, or at least the stable coins. I think it would be really interesting to see if like stable sitting on Aave like just flow from Ethereum mainnet to Plasma.
Well, I mean, I think that's the goal, right? Like, and this is the tweet. Wait, let me pull up the full image. I don't know why I'm doing like this. There we go. Yesterday, everything else was down. Ethereum was down 3.5%. Aave V3 deposits down from Jesus Christ. Is this in millions, Carlos, or in billions? It's in millions.
This is in millions, yeah. Obviously, like what some of the changes you see there, like, is due to price price depreciation of Ethereum. Like, it's still interesting, right? Like, just one day and then you already the top chain outside of Ethereum mainnet, like 4% market share. It's not bad at all.
No, it's not. But I agree with you. I mean, it's a lot of they're giving out a lot of incentives. I think yesterday, I don't know what the Aave things are now. I can just pull this up really quickly, but okay, like right now it is lending on USDT0 net lending is 11%, of which quite a bit is XPL incentives. I think majority of it is XPL incentives, and that's at 2 bill TVL. So that's like a lot of. I mean, I think this one's just like a shorter term opportunity and like a initial incentive program, but like you said, they're clearly trying to attack the Ethereum main chain at the moment. And it is expensive to do that. It is expensive to try and siphon off liquidity from. Why are you shaking your head, Ryan?
No, you're right. And if you're going to attack, I think any chain, it's probably that one. I do think though that the risk of payments as a loss leader is that I think payments are already like very low margin for any chain, and I don't think that there's a lot of DeFi capital that is also payments capital. Like the people who are using USDT for payments in Turkey and Argentina are not also the DeFi whales.
You don't know that. But yeah,
No,
no, I get what you mean.
no, it's TradFi, right? Like it's funds, it's institutions that are really moving around and then obviously you have like your crypto native whales, but you know, payments is already a very low cost for anyone anyway, and it's not that popular of a blockchain use case. So, I'm not saying that it's a bad strategy, but just like I question how effective it's going to be.
Can we talk about Tron's $2 median fee? Like, is that like a real, like, I don't understand. Like, do people actually pay $2 in every Tron transaction?
So, small caveat there with Tron, there is the notion of, let's call it like free transactions, or maybe a better framing is a sponsored transaction. So if you stake TRX, the native token of Tron, you receive like credits effectively to cover the fees of gas. And so very large stakers can also delegate and send those credits to other addresses. So the median fee in this case is not always the amount that was actually paid because of these credits. So we do need to account for that in there still from a data perspective.
Yeah, and like there are brokers that sit on top that are large ton stakers that just take care of, cross-border payments for in like APAC in Europe.
Right. So, and like a primary user of these are centralized exchanges, right? So everyone has talked about like, oh, centralized exchanges park a bunch of stables on Tron, and nobody was really able to answer why. But in my personal view, this is a large reason why. If you stake some Tron, you can, effectively cover the cost of your transaction fees with these credits. The risk, of course, you take is holding and being exposed to Tron. Although if you did that a couple of years ago, that ended up working quite well.
Yeah, I wonder because our Paulo holds a lot of Tron, obviously. So I wonder if he stakes this or like let it for it to be.
You
staked.
assume Paulo holds a lot of Tron, right? They have an other assets category that at the last attestation it was about $4.4 billion, but they've never disclosed the breakdown of that $4.4 billion.
I mean, not Tether. I mean, Paulo personally probably holds a lot of Tron.
Why?
Gut reaction. I imagine he holds.
That's fine.
That's
just what I was poking at.
Let's say I imagine he holds a lot of Tron. And if I was him, I would be lending that out to make sure that I am getting zero fees on my primary dollar, the digital dollar, on all exchanges, right? Like that would make sense to me. That's a more intricate way of solving that issue compared to the plasma version, which is they're also gonna do a credit system, but it's like per account based and you can't use it. Are you guys familiar with the Ronin free gas system, where it's like you can use it like 3 times a day and that's fine, like per account. So I think that's like the approach that Plasma is gonna take, where you can use it for a couple times a day or week or whatever, versus the broker system's kind of a sexier system.
Is the like Plasma / Ronin thing, is there any like does every active address get that credit system, or those like X number of free transactions? Because the obvious problem there is like, all right, let's say, you know, every address gets 2 credits or 2 free transactions. Like, okay, if I need to do 10 transactions a day, I'm just gonna have 10 addresses.
Yeah, I think that's fine.
Then
Because
you've
it's not for
effectively
all transactions, it's for USDT, right?
just
And
the
the
token
whole-
transfers.
The only reason that they want to block it is to prevent spam. I don't know how quickly you can create an account, or like create a million accounts, I guess, and then spam 2 transactions on them. And I don't know if that would fuck up the Plasma infrastructure. Do you get what I'm trying to say? Because like they don't actually care about that much from my understanding. The amount of money that you make off of like Ryan talked about, the amount of money that you make off of stablecoin transfers is minimal. So you could technically make it fully free, but
yeah,
then
like having the select transaction, I think is interesting. What about like you know, if I deposit USDT into Aave, like is that free or is it only transfers to you?
It's not. You didn't read my report. He didn't read my report. That's what I think that's what they're going to make money on. Like their goal is to have 2 different businesses, in my opinion. Stablecoin payments as one makes no money. DeFi as another one makes some money. But we'll have to see how much money they make. I mean, early days, they should be fine. They're incentivizing quite heavily.
Makes sense.
Dan, you're a rare guest on the pod. Can we have a private? What have you been looking at these days? You don't do a lot of portfolio talk, a lot of token talk.
No, I've really been consolidated in the majors for the most part from like a percentage basis. So Bitcoin, ETH, Sol, Hype, and then bounced around for the beta chasing, right? So like I was late to repurchasing a lot of ETH. I initially faded the first wave of Tom Lee, but fortunately made the smart decision and was like, okay, this is actually a trend. And repurchased, and then Zora went crazy during that time period. So saw that kind of forming, was early there. And then, then the Solana DATS came online. So the question is like, okay, we saw ETH DATS come online, immense ETH outperformance, ETH beta outperformed on the alt side of things. It was logical to think the same thing was going to happen to Solana assets. And we saw pump go to not 9 cents, but 9/10 of a cent, I believe it is. Up to, I think it's a $9-10 billion FDV. So it was nice to see that similar move happen. It was pretty easy pattern matching. I kind of think Q3 has really been on easy mode from that perspective. But then to your point, yeah, like after that, I kind of like turned the brain off, and I obviously ASTR, Aster, I don't even know how to say the thing. Like I haven't paid any attention to that.
I think Aster hit a lot of people by surprise. I think you had to be really online during then, and which I feel
I was on vacation that week too, so it was like, some of them you just got to throw your hands up. You're not going to hit them all. I can't remember who. I think it might have been 0x Kyle. I think he was talking about this concept when Circle IPO launched, and like he nailed that. It was like you really only need to hit like 1 or 2 things a year. That you like need to be the first one in, the first one out, hit the bottom, hit the top, and like you've kind of made your year. I think that's just like the right way to be thinking about things. Like if you've already nailed it all, you generally start to risk to lose from there. So like, I don't know, kind of shutting the brain off and coasting.
No, that makes sense. What is this? Wait, Ryan, I also want you to take a stab at this. Why is Sol underperforming so heavily these days? Why do you think that is?
Like what's the time frame that you're talking about?
2 months.
And then underperforming what? Like other majors, like
other
Hype,
majors.
BTC.
I mean, hype is down 30% past 2 weeks. I saw Jakob crying the other day.
2 months.
So it's just like kind of a weird trade, right? Or like a weird investment. It's historically led, done really, really well. But feels like it never got that thing with DATS that Ethereum did.
Yeah, so on the 1 month, Sol ETH is up 15%. If I zoom out to the 2 month, approximately, what's that, like the 26th? The 6th of August? No, that's almost 2 months. That's still 8%. Let me zoom out. Hold on. I need to go to July 26th. July. Okay, that's close enough. And then Sol ETH is flat on the 2 month time frame.
Sol ETH is flat, man. It's not outperforming.
I mean, I think the DAT thing is probably the first thing on the top of the list. Like, okay, I was actually tweeted about this today. Like, everyone knows Tom Lee and it's like, wow, he did really well. But like, when you start to measure how well he did, it's remarkable. He's going bar for bar with Saylor on trading volume, which is like a measure of attention, I think, sufficiently. And that number is actually very important for his style of accumulation, which is aggressive ATM issuance of new shares, raise cash, buy ETH. You need trading volume to drip shares into. The reason why is what mechanically happens is like a buyer hits the order book, and instead of buying their share from a seller, it is actually coming as a new share hitting them. And so on a percentage basis, you can't just like, if there's $100 million of volume, you can't like replace all of those with new shares, or else the price is going to go down. So there is some percentage range that makes sense here without like, aggressively dampening price. I think historically we've seen like roughly 10% or lower of volume can be effectively issued against instead of purely matching in the order book. And where was I going with that? Oh, yeah. On a trading volume basis, BitMine, BMNR does 40% of all DAT trading volume. They have accumulated 60% of all ETH and 10% of all crypto DAT treasury value. So MicroStrategy is obviously the whale there. But 10% is like night and day bigger than the next largest DAT. Let me pull up the actual leaderboard here. I think one of the third largest treasury company is one of these yet to launch Bitcoin companies, or yet to fully launch. Like a lot of them have already accumulated Bitcoin, but they haven't completed their SPAC mergers. Yeah, so number 3, I'll share screen, I guess.
Please.
Okay, you can bring it up on stage here. But number 3 is 21, which is like the Jack Mallers one. I think Tether is. I just clicked this out.
No.
I think Tether is involved in that one in some capacity. I think they're like participated in that initial raise. But yeah, so I mean, you can see like $70 billion of Bitcoin held at Strategy, $10 billion of Bitcoin and ETH held at BitMine. And then the next largest is this sort of unlaunched one, or not officially live, I guess is a better framing, at $5 billion. But then even SharpLink, so the next ETH DAT, has less than about a third as large as BitMine. So I don't know, Tom Lee's dominance is like not to be understated. And so his impact on ETH price, I think, also is not to be understated. And these Solana DATs, I promise this ties back to your question, but these Solana DATs, you saw launch with actually really large pipes. BitMine and SBET both launched with like, I forget the exact numbers now, but like between 2 and 400 million. Ford launched with 1.6 billion in cash and stablecoins. So that was all immediately deployed, but you haven't seen those like subsequent purchases, and that's been like this BitMine special.
Wait, it wasn't 1.6 cash, was it? I thought it was in kind.
All cash and stable coins. They're likely going to buy in kind, unlike with the next, or not buy in kind, but like buy at a discount from Treasury, Solana Foundation at some point. It's a smart thing to do, or just like locked other investors. But obviously that doesn't necessarily have the same price impact as like just smashing the open market. But no, the initial raise of 1.6 billion was all cash, and stable coins.
How much SOL does the foundation hold?
That's the $1 million question. With the token transparency effort, I would love to see the Solana team participate there. I think it's good for the industry. all of the initial foundation wallets are actually in the GitHub repo. The problem is the early days of Solana are like non-trivial to navigate from a data perspective. And so, yeah, I would love to see an updated and refreshed approach to transparency around every foundation, not just Solana, but Aptos, Sui, every large chain. I think it's really important. So yeah, personally, I'd love to see more of that.
Yeah, to the point on yeah, I think, Dan, I think to sum up what you're getting at on, why has performance happened over the last few months, I think we're very much in a flows-based market. And I think that there are some things that folks underappreciate about like performance. Like, so just like taking a step back, like over the last quarter, Solana's up 26%, ETH is up 58%, Bitcoin's up 2%. So both assets are outperforming Bitcoin, right? With Solana being the fastest horse. And because really like what you're seeing is that Bitcoin has lost its monopoly on TradFi flows, both like structurally and then just like practically with all that DAT money coming in. Though I do think like both Solana and ETH are both challenged from a growth perspective for different reasons, which is also like leading to some token softness. So Carlos put out a note maybe 2 or 3 months back, if I remember correctly, Carlos, about the Solana's new monetization method coming with BAM and how that's going to impact the amount of SOL that you need to pay fees. And so like on a per volume basis, we expect the Solana network's take to actually go down or on a per volume basis, which it was like quite high. It was like as high as 20 bips. It's fallen to 5 bips today. We actually think it's going to fall lower. Now, like I think that, the call there was, short-term weakness in the price of SOL because it's just not generating the economics that it was 12 months ago to sustain like this very big price, this very big market cap. And as a consequence, you're seeing its valuation expand. So if you look at like a long-term chart of the valuation on SOL, just like, trailing 12 months, like it's actually really increasing now because price is staying high, but that like per unit monetization is going down. ETH's challenged for similar reasons, though not exactly. Like it's just really hard to use that chain and apps aren't building on it. There's a lot of capital there that does pay a nice dividend to ETH, but it's not seeing growth. So, they're both challenged, I think, short term from a monetization perspective. My question fundamentally is like, what are they both doing to offset that lower revenue per unit of trading volume? Solana obviously has plans competing like in the perp space, which are going to be really interesting to see going forward. I don't exactly know what ETH's doing.
I don't know what ETH's doing as well. I am doubtful that Solana will be able to compete in the perps, not because of Hyperliquid, but because I think now everybody wants to compete in the perps landscape, and it is very, very difficult to be able to achieve that while you're a generalized chain. But
Yeah,
I mean, you never know, right? Like they very well could next week. I'm not very
They have
hopeful of
to.
the drift
Like
team.
they have to. They missed it, and they have to.
I think a really interesting implementation there, and I have no idea how the risk engine would work here. I think that is probably a hard question to answer, but some sort of perp decks that could leverage the recent rise in like prop AMMs. Those work really well on Solana. And it's been like this quasi order book approach where you do get some of this market making activity happening, but in a different form than just your traditional club. That could be an interesting implementation. Again, there's a lot of unanswered questions that I am not qualified to answer around how the hell a risk engine would work in that model and liquidations, et cetera. But that could be an interesting thing. I don't know if anyone's building that, but if I saw one of those start to come online, like I would pay attention to that. And then obviously Jito BAM's network is, they're enabling plugins that could potentially be really interesting for perps decks. But I broadly agree with Ryan. Your point is like, you got to, that's definitely the area of opportunity going forward.
I think you're starting to see just one last thing. Sorry, Bach. I think you're starting to see like success on getting like more proper trading on Solana. It is dominated by meme coin volumes where people don't really care about spreads or liquidity. But if you take a look at like on our DEX, I can share my screen quick. At like DEX volume on Solana, specifically for the Sol USDC and Sol USDT pairs, you get a
I'll pull it up, Brian. You just
no, you get a really nice chart up and to the right, right? Where like, you know, there's been a lot of chatter in Solana, which like I didn't believe for a long time that like, oh, spreads are like only 1 or 2 basis points and like often competitive with Binance. And I kind of was like, yeah, right. But for you to see this like kind of up only activity from the Sol USDC and USDT pairs in an environment where Solana activity is mostly flat this year, that tells me like they're actually making, you know, proper trading actually work, right? Which is what you need to sustain that like ICM vision. So early innings, but I think like they're making progress.
Yeah. Isn't the Jacob Carlos, guys, please correct me if I'm wrong, but isn't this idea of a prop AMM that can be generalized across a bunch of other things, just a V free, but each liquidity bin is the prop AMM itself? Does that make sense? Do you get what like because you can't make a prop AMM an order book? Because then why not just use an RFQ?
But in like a weird way, like a cluster of prop AMMs is like quasi order book, right? You're like they're all individuals, but to the user, maybe they aggregate together when like you're an aggregator routes your trade. It's definitely not one-to-one, but there's some similarities I think to be had there. Just on the perp side of things, again, like trading works fine. I just don't know how you would like liquidate and manage positions.
I'm pretty sure prop AMMs just get data from Binance Oracle, but at like different intervals. So I don't. I'm just saying.
I mean, there's definitely different strategies being run, and you can see that in the data because you see how frequently they're updating their oracles, and the frequency that like the price that they update to actually change is not one-to-one. So. But then the most boring or basic case, yes, they're just hitting Binance mid and like that's the execution and they apply some spread to that. But in the more interesting case, you're running some complex market making strategy where I'm not a market maker. I don't know what the strategies look like in practice, but yeah, I think there's way more interesting designs to be had.
But you can't get price discovery on that, which is, I think, the main thing for an order book, like. Because the whole, like, I don't know what the XPL hyperliquid volume is right now, but XPL launched at the price that hyperliquid was at, or like a little bit above, but like, or whatever. Hyperliquid Binance OKX, they set that price, right? But you can never be the first to launch. Like if I'm running a prop AMM, I can't launch a pre-market. I mean, I guess I could do what Hyperliquid does with like their Oracle, and it's like some average of the past 30 minutes on price, but then it also doesn't work because you're just making up numbers. There's no bids or asks. So
yeah, I think
quite a critical. I mean, imagine how much volume Hyperliquid gets just based off of that price discovery. So it's like it's very significant, but I'm not saying anything against like prop AMMs are not very good, because they are. Like the moment that like as good of that pricing you can get for the average user or for the SexTex arbitragers or whoever's swapping.
Well, you're avoiding the SexTex arbitragers. Those are the people trying to pick you off.
Okay, whatever. Like whatever is like very good, but you're never getting price discovery, which is not like you're missing out on that initial like whatever percent of trading and that first user for you to come to that will come to you. And does this make sense? I'm just rambling a bit, but like Carlos is shaking his head, so I'm just keeping going, but I think it makes sense.
No, I think it makes sense because how prop AMMs work, like just conceptually, is like they can push Oracle prices like a lot quicker than a traditional DEX, and those Oracle prices have to come from somewhere, right? So yeah, like I think you're right in the sense that they're not really pushing price discovery, but they're kind of like the first ones updating the price on chain, if that makes sense. So yeah, I'm not technical enough to know that, but yeah, I think you're right.
Yeah. again, I like, this is a great question to ask people running prop AMMs. But like I don't know, like intuitively, I think I agree, but the logic you use to determine the price you execute at is arbitrary, right? So like, I don't know. I don't have an answer. I think you could be right, but I can't confirm nor deny.
Okay, we can end it there where Dan said that I am right, or we can speak a bit more. What do we want?
Well, I mean, I think the most important, like just zooming out, prop AMMs were like 2 to 5% of total Solana DEX volume a year ago, and now they are 41% on the monthly and like 58% on the daily.
Okay, definitely very impressive, but Ryan, you always talk about this. What's the thing that you want on your chain? You want asset issuance and you want attention on your chain. You want to have the assets that are traded first. Solana has that with meme coins, 100%. It's the chain for meme coin trading. But if there is no proper club, there can be no price discovery on Solana, and therefore it can never have like the initial. Like I've been talking about this for months. It's listings for these clubs. Like that's all that matters, and Solana just can't get it right. I would probably, I mean, there's a bunch launching now, right? Like there's Bulk Trade, there's Bullet, who have rebranded now. Used to be not Zeta? Was it Zeta before?
It was Zeta, yeah, but that's also like an L2, so it's not really on Solana.
Yeah, Bulk Trade's also an L2, right?
I actually don't know their architecture, but I don't think so.
I don't understand your point, Bach.
My point is that prop AMMs are great, but they're not clubs. So I would, if I'm Solana, I want to focus on clubs because you already have prop AMMs are great for Sol USDT, Sol USDC. Meme coins are great, but you still want to compete in the club space. And prop AMMs just can't make that up. It can get people better fills than a typical AMM, but it can't get listings. That's my point. Is that okay?
Maybe one last thing on the prop AMM topic is one thing that I find really interesting is just like what's going on top of that, which is the routing wars between like Jupiter, DFlow, Titan, etc. I think like Jupiter generally has like, it's in the worst position it has ever been in terms of like competition. And I think like DFlow and Titan have a real shot at taking order flow away from them. I don't know if you guys have paid attention to that, but like DFlow just released like a new like just-in-time routing algorithm, and then Titan also released mainnet, and they've been doing great like in terms of taking more and more volume. So I think that's interesting.
Dan, I would love to get I think you're probably connected to these guys a lot. Well, I'm not connected to them at all, so you're definitely more connected than I am. Anybody from the prop AMM side, just like talk to them a bit about the challenge. Obviously they're not going to want to talk too much publicly. Although I did see Titan go on Lightspeed, but I don't know how closely they.
Yeah, it's definitely a challenge because how often do you get market makers to tell the world their strategies?
I don't want to. Yeah,
I know, but that is at the crux of like this entire conversation, right? It's like what they can do is their margin.
Yeah, and the thing with these guys, I find that people who want to come on the pod typically have not something to sell, but like they have a product that they want to advertise. Versus, I think a lot of the guys running the strategies typically, like it's hard to scale a market maker strategy, and if you already have one going, you don't need to like publicize it and advertise it, so it's tough. Hence why I also can't have you on, because you don't want to advertise anything. You've already made it. You just want to come on every once in a while.
Made it, yeah. I wish. No, Made It is Blockworks data flipping Bloomberg. I don't know.
Okay, very good.
Job's not finished, Baco. Walk in.
Very good. Anything you want to say before I end it? Okay, we're
What
good.
are the farming yields on plasma? I'm super late, but again,
Good.
kind
You
of been
should
locked
check-
in on the product. Need to zoom out into making money again.
Let me show you these. They are pretty good. I mean, I'm in. Oh, we're not there. There we go. So I'm in this like plasma USD thing. If you keep holding it, it's at 20% on 2.7 bill, which is ridiculous, yielding out 1.4 mil a day.
Now we're talking.
USDT 0 on Aave net lending. Just like if anybody's listening and wants to deposit into this, first of all, this is not financial advice. But second of all, you need to not have any debt if you're so you can't loop on Aave. If you loop on Aave, you do not get the rewards, the incentivized rewards. I think they want to.
Dude, this page is giving me flashback to like. Doesn't this look nearly identical to like some 2021 DAO forums? Just the structure and style.
Yeah, it looks like the discourse.
Yes, exactly. I couldn't think of the word. That's exactly what it looks like.
Yeah. No, but they have really great yields, especially on Aave. Aave 11% just for lending out is pretty good.
That's great.
Let's see how long it lasts for. I hope it lasts for a long time. But would recommend you check it out. And then before I end it, I need to do 3 things. I would like to thank Aptos and EigenCloud.
I think you unplugged your mic.
Can you hear me now?
Yes, I can.
I would like to thank Aptos and EigenCloud for sponsoring this stream. And I would like to thank you all for coming to chat with me, especially Ryan Connor, who had left once again.
It's an honor and a pleasure.
Very good.